live in the dungeon.
Oh God.
In the dungeon. I'm just looking to make sure we live in the dungeon.
Okay, cool.
Reception in the first one.
You know what? If I can turn.
All right, Rodney.
What's up, Chief?
How you doing?
Okay.
So we're here with Rodney Brand, another episode of Money Mondays. So you all may remember, if you've been following these Money Monday episodes, we had a discussion with Rodney Brand a few months ago, and the discussion was about blockchain technology. The discussion was about cryptocurrency, and really what it was because cryptocurrency and Bitcoin had been such a huge discussion point, chain technology and things like that. So if you don't know, right now you're looking at a discussion called Money Mondays, and I'm Keith Turner. This is Rodney Brand. Rodney Brand is an experienced technology professional, and he's worked in every aspect of technology you could probably think of when it comes to computer chips, processors, and programming. When we start talking about the nuts and bolts of how things work and operate, I love to talk to Rodney. And so what we did was, because the first live stream that we did not stream very well, and some of it got cut off, we decided to do kind of a retake, so to speak. So we're gonna have a brief discussion about first and foremost blockchain technology. And just so you know, Money Mondays is really an opportunity for people to have a discussion about personal finances, budgeting, and things that impact investing. And feel free to share this with a friend. We don't claim to be experts in anything. We just kind of share what we think we know. And so with that said, Rodney, we'll kind of start back how we ended last time. So we talked about blockchain technology, and so people are familiar with blockchain technology. Start to build the discussion of what the components are of blockchain technology. And I'll try not to interrupt, as people often complain that I interrupt when people are having this discussion.
I like that.
I feel like I know something about that area.
Yeah, but he does. Actually, he does.
But I want him to tell it, and then I'll jump in like double dutch, like, hey, you know.
I think it's great though that you pay attention to your listeners and you do take feedback.
Give me the blues.
No, he takes constructive feedback, and he's always on this trying to make sure this is the best it can be for everybody, because this is a lot of information that we usually don't get, you know, in certain sectors of, let's just say, our city or other cities. So this is a lot of information that a lot of people don't get, or they don't go looking for because they figure it's hard to get. But it's great that he shares this with everybody, and he definitely takes feedback constructively.
Because I mean, the nuggets for everything, man.
Yes.
We all can learn from everybody else, but go ahead.
So
tell us a little bit about what the idea of blockchain technology is.
At its core, basically, blockchain technology is about a cryptographically secure ledger. At its basis, say for instance, we all know we go to the bank, or anybody with accounting experience or whatever. Everybody who has a bank account or had a bank account, you got debits and credits on your bank account. They keep a record of how much money you put in the bank, or how much money you took out, how much you put in on an ongoing basis. But all that information, say you're at Bank of America, all that information is in a centralized database. They may back it up, they may replicate it, they may keep copies in maybe 3 different locations. But what would happen if somebody wanted to hit Bank of America or UMB or whatever and destroy all that information about how much money they say that you invested or you put in the bank, and all your transactions from 3 years ago? It's totally gone if they did that. Say you had a ledger that was distributed to servers all around the world. Like, everybody's on the internet. The internet's a collection of nodes, computers, millions, from here to North Korea to Australia to places in Europe, okay? Say you had a distributed file system that contained your ledger, your financial ledger, your financial records, that was all over the world. Not only was it all over the world and it was shared between millions of internet nodes, but what if it was cryptographically secure, so that whenever you made a debit or a credit, nobody could go back and change that? They can't crack the code to say, I didn't put $100 in, I put $50 in. So basically, it's cryptographically secured and it's distributed so that everybody has a copy of it, like an open secret. You know, an open secret is something that you can't really lie about. Everybody knows it. And if they can't change the open secret, hence the cryptographically secure, you've got something that's pretty good. So if the United States or China or whatever, all of a sudden, yen or dollars went down, or all of a sudden they wanted to take your money. Like, take for instance, all of you know about the financial crisis in Greece, where basically they raided everybody's bank accounts, and just the government took the money. What if your money, or the record of your money or your resources, was stored in a distributed database, so that if something like that happened, you wouldn't care, because in Australia they knew you had $1 million.
And so what's happening is that it's a system of decentralized verification.
Yes, sir.
So you have secure decentralized. Right. Well, secure is relative, but true. Secure.
Yeah, you're right.
Perceived as secure. So right now we have like Federal Bank. The Federal Bank is a centralized banking system, and they control what happens as far as value of dollar, value of debt for America, that type of thing.
Yes.
But when everybody who knows how to mine in the blockchain,
yes,
then they can be a verifier of a ledger. Then this other group can be a verifier of a ledger. So you don't need one institution to verify how much money is in your account. Right. You have multiple nodes or multiple groups that are verifying accounts, and therefore your money is recorded. Yes. It has a digital signature of this is how much is there. It's been verified in various locations. Mm-hmm. No node is more important than the other node.
Yes.
And so from a blockchain technology perspective, it's a way for kind of people to take back control in a sense.
Yes.
Yeah, it's a more decentralized way of banking. So rich bankers don't control the narrative. The people control the narrative.
Yes.
The people who know how to code.
Yes. Some people who they went as far as to say that it's a way of democratizing finance.
That's a good way to put it.
Okay. You will notice, I mean, for everybody who follows internet, what's going on the internet, and Web 2.0, Web 3.0, when the internet started back in '95, it was decentralized. But you notice now, and this happens all the time, it happens in phases and waves. Now you've noticed that the internet is centralizing again. And usually when it centralizes, people fight to decentralize it. Because remember, back in '95, between '95 and 2000, there were multiple websites, and nobody really had control until maybe a little known organization known as AOL came in and attempted to centralize the web. They wanted everybody on the web to be on AOL, and then they went away. Then we had a little bit of breakout again, but let's fast forward to 2018. If we want to talk about centralization on the internet, we can name it. We know the word.
Facebook.
They are attempting, and it's not a bad thing, but they are attempting to centralize the web again. They want you to think that the internet is not this big, wide collection of millions of nodes. Right. The internet is Facebook, and that's where they want you to go and live, so they can collect your data. That's take that into finance, or even more. Blockchain is not just about finance and money.
Exactly.
You can store any kind of contract. Documents.
So Ethereum is a company.
Yes.
Right. So
real estate records. Right. Birth records. Your DNA sequence. Don't get scared.
Yeah.
Don't get scared.
There's a young man here in St. Louis that has a company that they've created a blockchain method of managing blood type and blood information.
Oh, that's cool.
He's 18 years old. I met him at an event maybe a year ago. Impressive. Many implementations. So now we have an idea of what blockchain technology is. So now people are hearing the term. let's jump all the way back to what was it? March, April, May, when people were going Bitcoin crazy, and even yourself was trying to figure out where you had stored your Bitcoin, because somebody had 200-300 Bitcoin and got it when it was maybe $8 a share,
$2.50,
and he couldn't find it. So those who went crazy about that are probably going crazy now, saying, "Man, you missed out on all that money." But the reality of it is that there was a huge sensation recently about Bitcoin, which is just one of many cryptocurrencies. So explain to us the idea behind a cryptocurrency, and then we can have some discussion around that.
Basically, cryptocurrency, or the very first cryptocurrency based on blockchain technology, Bitcoin. Everybody's probably heard about that by now. It's just one of the many implementations of that secure ledger. In its basic form, it's just a way, like I said, to keep a record of transactions between people, whether it be for goods and services, or in this case, Bitcoin, its own money, cryptocurrency. They took blockchain and said, well, let's create a cryptographically secure ledger based on a currency, and we're going to call it Bitcoin. If you go out there on the internet now and search for cryptocurrencies, oh my God, it's like 500. Yeah. The only reason that Bitcoin got so big is because it was the first one.
Well, first mover's advantage, regular business thing. And the interesting part about it is that, and we can get to that, but Bitcoin played a tremendous role because in the dark web, and the dark web is really a place early on that if you want to do transactions online, but you don't really want anybody to see it. So if you're trying to buy illegal guns or whatever, anything nefarious, the dark web was there for you to be able to do that. And cryptocurrency, in particular Bitcoin, was very popular in that. So if I wanted to buy something from Rodney and I didn't want the whole world to see, but I still wanted somebody to recognize the value of the currency, then I would buy the item from Rodney and I would use this encrypted Bitcoin currency. So yes. I still knew I had the money. Everybody, every main banking system that probably wouldn't back the transaction wouldn't, wouldn't support that. Right. But I could still verify that we exchanged something for yes. a valuable piece. Yes. So you gave me a product, I gave you some currency. So that's why Bitcoin was so popular. Now, we had a discussion in the last episode, and I'll bring back that discussion, but we won't harp on it too long, is my idea when Bitcoin became popular on mainstream, it became popular because it was more of a sensation, not that it was more of a unique entity at that point. And so a lot of people started to add Bitcoin into their portfolio because there was such a huge demand. But my argument for it not being sustainable was, one, there's going to be a lot of cryptocurrency out here, number one. And number two, the popularity that cryptocurrency has, Bitcoin in particular, happened because it was something that could facilitate transactions in a dark, unmonitored place. So if you make Bitcoin mainstream, then it becomes like every other currency. It's regulated, it's validated by banks, it's part of portfolios, and now the main advantage of it being used has now changed, because now the main advantage was it being able to do transactions that people can't see, and now when it's regulated, it has no real advantage. So that was my perspective to investors that I was talking to about Bitcoin, but my perspective is not lost. So that was my rationale behind saying the sustainability of the advantage and the value of Bitcoin was going to be a challenge, because again, it had no real differentiator. The main differentiator initially was it being able to do these things in the dark, having first movers advantage, and now, hey, it's mainstream. It's just like, it would essentially now, it has the same type of regulation and accountability as the American dollar, the yen, everything. So what is your thought about that? We don't always agree. I learned a lot from him, so we don't always agree. So.
I would say over the past 3 years, the fight between the American SEC, South Korean currency exchange, China. Oh my God, China. They've had their ups and downs with cryptocurrencies. Regulation does have its effects. You're right, Keith, on that. But I would add to that, or say to that, don't forget is when you say the positives with cryptocurrency, decentralized records of money transactions, whether it's for good or bad, or for money laundering or regular transactions or whatever. If it's regulated or not, that's still a plus.
It's still a plus
because, like I said, I could hit Bank of America tomorrow, and then they'd have a problem because they're federally insured. So if they ever lost your money, the going thing is, we'll get your money back because we're federally insured. And you're like, yeah, right. But if I got it all in Bitcoin, I know that it's good because I can go to any currency exchange around the world that will change my BTC over to yen, over to euros, over to whatever.
But now the challenge becomes, if that's the case, then it still doesn't have a differentiator from people being able to create their own blockchain currency.
That's true.
So now what the expectation is that, say for instance, you got an index that you look at to see what's moving with particular cryptocurrency. Yep. It might be 30 of them on there, and that's just 30. As we just said earlier, there are tons of cryptocurrencies out there. So now if they're not unified, if not, it's not a way to unify these different technologies, now you're expecting all these different systems to be able to accommodate the other systems. That's not reasonable. So now we understand decentralized is better, true, but now we have so many different. Now who becomes the leader? Unless there's a way to. I think we just came up with a business idea. I think we found a way to make a simple way to make these cryptocurrencies when needed. Sometimes it's almost like when you have one healthcare database, and you have a different healthcare database, and at some point one gets acquired. People create tools so they're easy.
Yes.
We might have to do something like that.
That's interesting.
And hold on, I'm gonna edit that part out. Let me lie, my bad.
But
I get your point.
Like he say, not to harp. I'll just say, yeah, you're absolutely right. There's a flood of different types of cryptocurrencies and different methods for doing the transactions and updating whatever, even though it's based on the core blockchain technology. And you're right. And Bitcoin, just because it was first, it was in there first, it had mind share, et cetera, et cetera. You're right, it was the big one. And if you notice, Bitcoin blew up, but anybody who's been following lately, it did normalize. And this year it normalized in a big way, because Bitcoin at one point got up to 20,000 per Bitcoin, and now it dived drastically this year. It's down to like 3,000, I think now.
I mean, it's hard to sustain when you have that many competitors. Shout out to Jared Arms. He has his own cryptocurrency, and if you all don't follow Jared, follow him. He's offering tokens about it. He's got a good business model.
Oh, wow.
So follow Jared on Facebook, but he has his own cryptocurrency, which is a token based thing, but reach out to him. So I wanted to make sure that when people were talking about Bitcoin, we had a nice 45, 50-minute conversation the last time we talked, but we said we make our best effort to make it brief. But when we start talking about blockchain, we start talking about cryptocurrency. I think the last time we also talked about mining.
Oh, okay.
So the mining of Bitcoin and what that looks like. So again, some of these conversations with Money Mondays are conversations that, we talk about personal finance, we talk about budgeting, we talk about some things that are high level investing, maybe how to calculate your dividend yield. Some things are very minor practices. Some things like this talk about cryptocurrency. So we're just trying to make sure that we touch on these different things. So in this particular case, you might not have any concerns or ideas, but when you start talking about mining Bitcoin or mining other types of currencies, then that's the way that you create value without buying it. So if you learn this skill as you begin to mine Bitcoin, then you get money in Bitcoin within that system and in other systems for doing it. So give us a big picture of what mining Bitcoin or any cryptocurrency.
Like 10,000. Real quick. Okay, so Keith made a key point. It's like, okay, how do you get Bitcoins? You either buy or trade the ones that are already in existence, or like he said, you can mine them. If you look up all the information, the technical information, or the white paper on Bitcoin, the way that they come into existence is they are mined. Every transaction that takes place on that distributed ledger or file that we talked about is done by a computer somewhere on one of the millions of internet nodes. Okay, there are people who work or allow their computers to be nodes in the Bitcoin network. Basically, nodes that do the transactions and write the cryptographically secure block or record to that ledger when you buy something in Bitcoin or somebody gives you Bitcoin. Okay, for allowing your computer to be involved in transactions, whether it be 1 or a billion, you can get Bitcoin. You can actually mine one or be awarded one or a fraction of one. Now, the funny thing about Bitcoin and its simplicity and how it operates is the guy who created it, he built in a artificial scarcity. Anybody who's an econ major, I'm not an econ major, I just took 101 and 102. Maybe Keith can explain all this.
Yeah, I can explain all of that.
Right. For whether it be gold, silver, bronze, salt, whatever, scarcity is what makes it valuable. Right? So that's all I know.
It's a commodity.
It's a commodity. So in the existence of Bitcoin, there can only be a certain number ever mined. And once that number is mined, that number will be shared amongst all the people who are using it or using it in transactions. Okay, the more that come out, the harder it is to mine them. The more transactions you will have to do per second to solve the puzzles required by your computer or your GPU or CPU in your computer. Or now they're using ASICs to do it, because now it's so hard to mine a Bitcoin because there are so many in existence now, and it's such a big thing. We couldn't do it. Well, you could do it, but you might get a nano coin, a nano Bitcoin after spending a month of trying to mine one.
So he talked about crypto, nano. If you don't know any of these terms, commodities, artificial and inflate shortages. Hey, look, if you got any questions, email us at moneymondays@artisKEITH.com. We'll respond. I'm just saying, usually I do this with JP, CEO, and this was a kind of a last minute, so we're doing it in the dungeon right now, but usually JP will be looking at the comments, and right now I can't see the comments, but I can only imagine the comments and the looks that people are giving. Because
okay, Barry, you want to get Bitcoin without paying for it or trading for it, mining, you have to have an extremely powerful computer, and you have to do work in the network. That's how that works.
I appreciate you, Rodney.
Now, not only Keith pays attention to his the comments after the videos too, but so do I. Last time, I was just to give more information. Last time we did this, I noticed there was one or two people that made a comment, asked a question. I thought I'd address it. They said, "Well, it's still electronic and it's still governed by computers and electricity. What if there's an EMP blast? EMP being an electromagnetic pulse. You know what that is? You can wipe out all the electricity in a metropolitan area or wherever, but an EMP bomb. United States has them. China definitely has them. The Soviet Union has them.
Everybody got them. I got two of them.
You got
I'm just joking. I don't need no
There's
trouble.
one under here.
I don't need any problems.
But I'm gonna say it again. You're right. But what did we say is one of the not the criteria, but one of the aspects of cryptocurrency and blockchain? It's a copy of the ledger is distributed on millions of nodes around the planet. So I'd have to EMP the whole planet.
And if that's the case, we got a problem.
We got a problem. I mean, we got an ET problem. But that's one. Secondly, I said that it's a file. The ledger is a file. Just because I shut down all the computers doesn't mean that I wiped out and erased the file.
The data's still there.
The data is still there. When I get the power back up, get the computers back up. If Keith backed up, that ledger to a DVD or a CD or something like this, he just bring it back up, and your money, everything you owned and every transaction you made, he's got a copy of it. And what if somebody in Alaska has a copy too when they get their computers back up? So and then the third, anything that's cryptographically hashed or security converted, if you got enough time like Keith does, and you're not doing a lot from day to day because all your businesses are working for you, you might be able to crack one of these 256-bit crypto hashes.
That's right. So, and that's what crypto is. Crypto is encryption. Encryption is the term that's used for security. In that we start talking about commodities, it's really supply and demand. We start talking about mining. It's that process of being able to derive Bitcoin. So all of these things we can try to explain it in a little bit more detail. But the reality of it is things are so fluid, they move so fast that we all need to be constantly reading. We all need to be talking to each other. We all need to be accessing resources to get more information, because as technology develops and things evolve, you miss out on opportunities to earn income and make money. And the whole reason why we have Money Mondays is we're looking for ways in this short life that we have to be able to accumulate some money and some wealth, and then be able to make the right decisions once we save it and invest it. So we thank you all for watching Money Mondays. Again, just as a reminder, we're still working on the podcast. Shout out to Vernon Ross. And we still will be doing the private stream to help people understand the different triggers and the calculations to things that impact your personal credit, and then have some other professionals on there to talk to you about steps to improve your credit without paying thousands and thousands of dollars to people. But your credit is important, and the reason why we're doing the private stream for the credit improvement is because that is a huge way that people are impacted financially, is when your credit is below what they consider acceptable. So really, man, you get impacted with 650 or below nowadays. You know what I mean? Because you know, if you got under 700, they start amending the cost of your insurance. We had Kathy Conley Jones on here, and she started talking about how your insurance is impacted by your credit report or the value. So say, for instance, we use insurance. If it costs you more to have insurance in a certain location and you have a bad credit, then you may pay 10% or 20% for insurance more than somebody else in a different location with a better credit score. And look at that, puts your ability to be able to save money and invest your money at a disadvantage. So we feel like it's very important to return to that. But thank you all for watching. I'm gonna leave you all with a little entertainment from Rodney right now, and I'm gonna go over here. If only you all can see the rest of the dungeon, I won't show it to you.
AKA the Bat Cave.